Hey guys, so this is episode number 5. So we've gone through the bias. Um, Now we're going to look at entries, which people say is the most important part. But also at the same time, you need to have your overall basis in place. So you need to have what direction you think the market's going in, and then we can see how to jump in and how to jump out. So there's two ones you're gonna be looking at today. Might stick it to one, depends on how long this is gonna go for, because we this is a lot to cover. So first we need to focus on um, bias. Bias. I keep doing that. Bias. So on the monthly, we saw that price has been ranging a little bit. If we look more into the weekly, we can see that price now is making higher highs and lower lows. So lower low, price went up, higher high came down, lower low, higher high, lower low. Now, price hasn't broken market structure here, but it has broken the body. So I would say that is relevant to what's going on now, and it's doing a lower low here. Moving averages, remember? Blue is above red, price is above the red, and we're expecting a higher high. Now, in the next episode, we're going to do Fibonacci, and we're also going to do how you're going to manage that trade once you're in it, so you get as much money profit as possible. Your take profit and your stop loss. So your stop loss is your safety net. Your take profit is where you're going to jump out of the market once price reaches a certain point. You can also close it, your trade, before price moves to that take profit. Um, so make sure that you get as much money and you minimize your losses. So you need to see if it's a trade entry or a range entry. With a trend entry, you need to see if price is coming close to your support and resistance, or is price coming close to your trend line. So let's move this. So we saw that price was moving to the daily trend line here. And then we're waiting for how price reacts when it gets to that trend line. Then we're waiting for a break of the counter trend line. And then we'll enter and make sure that our moving averages are backing us up on our entry. So 4 hour, you need to do your counter trend line. Once you get more practice, you can do it on the 2 hour. So counter trend line is the trend line in the opposite direction of your main trend line. So price is moving downwards. So you want to go to the opposite side of the trend line, so the top part, and then do the higher highs going downwards. If it's the opposite direction, you do the lower lows going up towards the trend line of your main trend line. So this is the opposite of your main trend line, which is up on the daily. So you go to your 4 hour and you do the higher highs, the recent higher highs going towards the trend line on the 4 hour. And then when you get more practice, you can do it on the 2 hour. 2 hour, this time is going to be your entry. If the longer it takes, the candles, so 4 hour is 4 hours of price. 2 hour is every 2 hours of price. It shows how price has been moving. It shows the open and close. Red candles, as you know, is bearish. Green candles, as you know, is bullish. So first one, if it's the trend line, so we see the basis is price ranging, or is it trending? Price on the weekly, you can say possibly is trending, it's moving upwards. On the daily, it's moving between these moving averages, so you can say it's ranging. So I'd go for more of a ranging type setup if I'm looking for it. So I would rather wait for price to move to support and resistance. But if it goes to a trend line and you can expect a nice bounce off the trend line, third bounces are the more high probability. Fourth bounces is less probability, but you can still take a fourth bounce just as long as you have your entry requirements. So one, you need to look at the price action. And what we have here is a morning star. So I only look at two. So let me get the brush. I only look for two down here. And let me take that off. Let me move in so you can see. So you can see these three candles right here. You've got the red one, the green one, and the green one. I only look for two candlestick patterns when I'm trading this strategy. So when price reacts to your trend line or your support and resistance, you want to go into your entry time frame. This one's a 2 hour, and see how it reacts. You want to look for these three candles in this pattern. So this one is a morning star. This pattern here, lower. This one's slightly lower. This one's higher, and then opposite direction would be here. Or you'd look for an engulfing. This one engulfs, swallows the candle next to it completely. So this body close is up here, and this one closes below this red one here. And then the opposite direction would be this one. So if we was doing a descending trend line, you'd be looking for this one. Ascending trend line, when the trend line is going up, you'd be looking for this one. So let's move back to the charts. So first you need this price action. So engulfing or morning star or evening star, here you got a morning star, as you can see. Next thing, it needs to break the counter trend line. It does. Are these moving averages crossed? They are. So 1, 2 breaks it here. So 1, price action. 2, crossing of the moving averages. 3, breaks counter trend line, and then you're waiting. Once it's done all of those 3, you're waiting for one more thing. So you want price to break the last higher, the body of the higher high, or lower low in the direction of your trade. So the last higher high in the direction of your trade is at this point here. So if I go in further, you can see that the last higher high is here where I'm putting the cursor. So this would be where you want price to close above the body of the higher high or lower low in the direction of your trend, of your trade. So you can see this green candle breaks the counter trend line, breaks the higher high here. You want to make sure that it's not too many pips, because sometimes you might have a big candle that breaks it. You want to make sure it's a decent amount. It's a not too big of a distance between here and the break of the trend line. Otherwise, the risk to reward won't be too great. Then you would enter. So this green one closed above the higher body of the higher high and the counter trend line. You got your price action, you move in averages, and this is when you would enter. So we're going for a long position. And if it was going downwards, you'd expect it. You'd expect to take everything in the opposite. So you'd look for price action. Instead of a morning star, you're looking for an evening star, looking for a break of the lower low on the 2 hour, moving averages, crossing on the 2 hour, and everything else, and so on and so forth. You want your stop loss, which is your safety net, 8 pips below this candlestick pattern. So we'll count at 8 pips. 1, 2, 3, 4, 5, 6, 7. So that's around about 8 pips. So 8 pips below the low, and then you're going to be targeting, if you go to the 4 hour or the daily, the higher high in the direction, the next higher high in the direction that the trade is going. So this is the body of the higher high of the trade's going, and this is what you would be targeting. If I looked for the daily, you can see that the trend, the last higher high on the daily is up here, so you can pick either one. But since this is a nice resistance point, I'm going to take the body to the body here of this higher high, and that would be your entry for this trend line one. So you got the entry requirements, price action. Let's go to the 2 hour. So you got the price action with the evening star or the morning star. Then you have the break of the higher high or lower low, and then you have the moving averages, and then the counter trend line, and then you'd enter. So the next one we're going to go through how you're going to manage your trade and how you would take it if this trade was one of the ranging trades. So I'll see you in the next episode.